Are you worried that the stock market may drop back down again after a very strong rally the beginning of this month? Well, you're not alone, because on the last trading day, Friday, November 10, we detected unusual options activity showing wealthy professional investors hedging their positions. And so in this video, we will show you the simple strategy they are doing in order to make a better risk to reward calculation so that they can maximize their profits. So without further ado, let's get to the data. This is the options time and sales tape here. We are looking at the SPY ETF for the S&P 500 index. As you can see, on November 10, we have at 4:07:32 second mark 10,764 contracts for the 420 strike puts and the 413 strike puts expiring January 2024. This isn't the only one, because here 4:07 same time another 8,611, and here's another 6,459, all at the same time. So this is the same investor. So what is going on here? Let's take a deeper look at the options chain to find out. January 2024, that's 68 days away. So we'll take a look at the strike price that they bought and sold. The 420s. You can see here there was a total of 47,000 at the 420 strike price puts, and also here at the 413 strike puts, 43,000. Okay, so we believe they had bought these 420 strike puts and sold the 413 strike puts. And when you analyze the trade, you can see that this is a short position. This is known as a vertical put spread. Okay, and we can estimate the value of their trade by looking at the cost price that they paid. We can see here that they paid $373 for the 420 strike puts, and then they sold for $284 the 413 strike puts. So if we calculate this, 373 subtracted by 284, since they sold that to get a credit, this is the estimated cost per contract, $89. And if we estimate 40,000 contracts, this was about $3.56 million. Okay, so why did they spend $3.5 million? And what does that do for them? So we can see here that currently the stock market SPY is trading at 440. If the price goes down, this will start to become profitable. And so at expiration, January 19 or 20, when that expires, this is what the graph would look like. You can see here that if the stock market stays where it is at 440, they will lose this $88. or 89. We saw that they paid 89. Right? If the stock market drops down, starts to drop past 418, you could see that they could potentially make $611, right, at the 411 price here. So the price is on the x-axis here. So as we move the mouse, you could see if the price of the stock goes down, the profits increase because the profit is on the y-axis here. Okay, this is a profit loss diagram which takes into account the cost of this trade already, which is why we have a negative 89. If this trade doesn't drop, it goes up, so they'll lose $89. If the stock market rallies and continues to go up, they lose $89. But if it drops, they could make $611. So what is that as far as the risk to reward here? 611 divided by 89 is a 6.86 ratio, right? So they essentially could make 686%. So a risk of 1 to 6.8. So very, very good risk to reward ratio here. And you can see that. Why did they choose about 411? You can see that when we analyze this, you can see that around that 410 mark is where they reach max profit. Well, 410 is right here, right? 410 is our previous low recently here, is 410. And so that is why they picked the strategy. Is they believe there's a probability that the stock market could retest these lows again by January 19, 2024. And so if it does go back down here, they could potentially make 686%. That's quite a lot, right, for this type of hedge and strategy, a very simple vertical put spread. And so these put spreads can also be used as bullish call spreads that are bullish in direction. We could flip this the other way and go bullish. And if you're interested in something like that, we actually proved that we can do this with a stock, Microsoft. Here, we put out this video to show our profits that we made, 453%. This was trading Microsoft. And if you can watch that video, you can see how we use risk to reward ratios in our option strategies to make more money in the stock market. All right, this is on our channel. You can search the title and you'll find it. Still, we'll also put a link at the end of this video. Okay, so if you're interested in this type of data analysis that we do, where we are able to pick the right stocks to predict stock price movements, that then allows us to diversify our portfolio with better stock picks, then consider joining our membership by clicking the join button, where we share exclusive videos to our members only with this type of analysis so we can beat the stock market. So take care and have a great weekend, everyone.